Hi everyone, welcome to my YouTube channel. My name is Tabitha, and if you're new to this channel, please welcome. If you haven't subscribed yet, please subscribe. Today we're going to talk about Canadian dividend stock. So we are going to explain what you need to know when you're picking stocks and which one you're supposed to pick. So if you haven't watched my previous video about introduction to stocks, and then you can watch that. There's another one too that talk about REIT, and then you can also watch that one too. So the stocks, dividend stocks are the one when you invest in a company, you buy these shares and they pay you dividend every month or quarterly. So for BMO, the company that we are going to look at, they do their dividend pay in 3-month quarterly. So example of one of the companies is BMO, Bank of Montreal. A stock symbol is BMO.TO if you're buying on Toronto Stock Exchange. So this is investment banking company. So it's one of the big five Canadian banking companies, and they deal in client-based investment and a lot of investment activities. So before you pick any dividend stocks, you have to learn about the stability of the company. So how long have they been in business, and what were the activities, the failure and the success. So for BMO, they have been in a business since 1817, which is 191 years. So they have been doing business since then, and they are pretty much stable companies. They have survived World War One. They also survived World War Two. They survived Great Depression. They also survived 2008 financial crisis. So they have been there doing the business all through all this difficult time. And I know they are going to survive coronavirus crisis too. So BMO price today is 96.77. So why is it important for you to look at the price, the current price, the previous price, so for you to make a good investment decision? Whether you are a short-term investor or a long-term investor, you need to know where is the price and today, and what was the price in the last 52 weeks. So there's something that they call 52 weeks high and 52-week low. So how high did the price go in the last 52 weeks, and how low was the price for you to make, and what is the price today for you to make a very good sound decision to buy these stocks. So let's see, for example, we have 96.77 is the price of BMO today. Would you buy it? If you're a short-term investor and you're only interested in selling these stocks in maybe 3-month time, so is it worth it? So, and why will you buy it at 96, and what was the highest in the last 52 weeks? So let's see. If in the last 52 weeks the highest was 105.75, and the price is now at 96.77, as a short-term investor who want to just collect profit and go, and they are not interested in collecting dividend every month, is it a good idea for you to buy it at 96? And how many shares are you going to buy to buy with 96.77? So, and there's also a probability it might not go up, instead it might go down depending on the condition of the market. So is it a good idea for you to buy it? So before you pick or buy any stocks, you have to check what was the highest price in the last 52 weeks, and what was the price now, and whether it's worth it for you to buy it now, or wait until it's dropped, or drop. And it's more advisable for everyone investor to buy it when it's low. So when it's low, for a short investor, you will really make that profit when it rise, when the prices goes up. And also for a long-term investor who is interested in dividend collection, that one is also good, because when you buy it at a lower price, you will buy more shares, and which means more dividend every month. So it's both advantageous for both investors, either short-term or long-term investors, to buy at lowest price. So the last 52 weeks, this stocks had dropped to 55.75, and if you had bought it then, and then now at 96, when you sell it as a short-term investor, you will make a profit, significant profit, and you walk away. If you had bought it at 55.75 as a long-term investor who also collect dividend every month, so you will also be handing more dividend because you bought more shares, and then also you will have that capital gained then, and if you want to sell it, you can sell it. So you benefit both short-term and long-term. BMO current ratio. Why do you want to look at the current ratio before you make your decision whether you should buy this stock or not? So current ratio is the ability of the company to be able to pay the short-term obligation or short-term liabilities. So if a company have a huge liabilities, then the cash that they have in hand to pay their liabilities, that thing most of the time is seen as not very good for the company. But with the company like BMO, which has survived all hard time, so I think it should be exceptional, and then you can go ahead and do your investment, because this bank has shown stability over the years throughout. But for most companies, it's really critical if current ratio is very low. So current ratio, you have the current assets and current liabilities. So when you get the current ratio, it will be a number like this. So for BMO 0.98, it could be like, because of this hard time of coronavirus, that they are maybe keeping their liabilities are off a bit, but their current liabilities, and it could be like because of this current situation. But most of the time you have to look at the current ratio. What is the current ratio before you make your decision? It could be one of the reasons, and might not be the main reason why you will not want to invest in the company, but you also, it's very important you check dividend payout. So company like BMO, they never miss dividend payment since 1829. They have consistently been paying dividend, and it's ranged between like 40 to 50% of the annual profit that goes to investors, and it is paid quarterly. So The annual percentage is mostly 6%. So we mean if you have an investment of 10,000, so you get 600 annually, and 150 quarterly, or $150 a month. So that's the dividend that you will be earning every month, and as long as you keep it, that thing will come into your account every quarter. And every other year you keep your investment, you get capital gain. And if you decide to sell it, and then well and good, you can also do that if the price has risen to the expected amount that you wanted.